market is not moving randomly. It looks random when you don't know what it's reaching for, but it's not. Every move price makes, it's hunting something specific, and once I show you what that is, you're not going to be able to unsee it. By the end of this video, I want you guys to understand that you'll be able to understand where price is most likely headed before it gets there. That's the foundation of trading. That's the foundation of price movement. It is the one concept in trading that could probably make you profitable. That concept is liquidity. Liquidity is resting orders in the market. That's it. It's every stop loss, pending order, buy limit, sell stop, sell limit, every single order that is near a swing high or swing low, that is considered liquidity. That's all it is. It's not a specific level or made up zone. It is just orders on the order book that price draws to. They pile up in predictable spots, and here's the shift that I want you guys to make in your head. It does not move towards a level because the level is special. It moves there because that's where the orders are. A level is just a place where orders cluster, and big institutions need these orders because they're moving massive amounts of size at a price that they want to enter at. They want an ideal price for them to engage in the market. And price seeks these quote unquote levels. Now there's three things that price does. It accumulates, engineers liquidity, or seeks liquidity. That is all price is going to be doing the entire time. You have two types of liquidity. You have sell side, which is areas of liquidity below price, and you have buy side, which is areas of liquidity above price. Going into this first example, I just want you guys to see how you can apply and how you can look for these quote unquote liquidity sweeps that ICT traders use and traders like myself use. So right here we have this swing low that is considered sell side liquidity because it's currently below where price is trading at. Here we see there's a swing low inside this buy side imbalance, sell side inefficiency that I will go over in later videos. But this is a great draw for price, especially once you see that we are making lower highs. Currently, price is accumulating, and then immediately you see that it will begin to hunt and seek this sell side liquidity. After seeking this sell side liquidity, what does price begin to do? It fills those buy limits, fills those sell stops, what may have you, fills those orders, and then begins to hunt for the other end of the range. Why does this work? It is because once these orders get filled, you have massive amounts of size and massive amounts of money entering the market. This is an example of sell side. You see that price sweeps this liquidity. We create this little rejection block. Let's say you enter on the rejection block, stop at the low, and you target the other end of the range, you would hit your TP. Now, let's look at another example of sell side. Here we have this sell side liquidity right here. It is another swing low in this range. This is an internal low in this range. What do we see price do? Boom, we sweep this liquidity. Let's say you enter on the rejection block again, and let's say your target is the other end of the range. What ends up happening? Boom, you hit your take profit. So here's what actually happens when a liquidity sweep occurs. Price runs at a level, spikes through it, triggers all those resting orders, and then reverses. This move is called the liquidity sweep or a stop run, depending on who you hear it from. Let's watch it on this example right here. Here we currently swept this major swing low, and obviously after sweeping the swing low, I expect us to hunt this buy side up here. Let's play this out and see what happens. Boom. We immediately hunt this buy side, and after sweeping out this buy side, this wick right here, this is the raid on liquidity. Price pushes through, grabs all the stops resting through, all the orders there, and all the breakout traders that tried to long this move. This is where retail usually gets trapped as well. Not because they're dumb, but because the obvious trade is engineered to be the wrong one. After moving so bullishly, a lot of retail traders will enter this and think, oh, let me catch the rest of this move higher, let me catch this high, let me catch all the highs over here, but that's wrong. That's not what price wants to do. After creating this wick and seeing how heavily price pushes back down into this range, you need to understand that this was the liquidity that was swept, this engineered high, this engineered equal high. After sweeping and closing lower, this rejection shows that price wants to seek lower. So what do? For example, You enter onto this rejection block and you target the other end of the range again. Now, what happens here? Let's play this out. Just watch this example. Boom. Price sweeps the other end of the range. Now, this did take a long time, but a liquidity sweep is still a liquidity sweep. A stop rate is still a stop rate. This stuff still works. So how do you actually use this? Before you enter any trade, I want you guys to ask yourself, where is the obvious liquidity above me and where's the obvious liquidity below me? So looking at this current trend down, we have this low resistance liquidity, or trend line liquidity as people like to call it. So you can expect price to make some sort of pop back higher or some move higher. That is what you can expect, right? We have all this buy side. Now, what do we also have looking to the left? We have this swing low, this massive swing low right here. Now, since we are currently in a downtrend, where can you expect price to enter or tap into before making a move onto all these highs? You can expect it to enter and sweep this sell side first. How can you frame this to enter with the trend as well? So currently we see that we are in a bearish downtrend. We are generating a lot of liquidity. We are engineering a lot of buy side. However, we have a 1 hour change in the state of delivery for lower, and if we look to our left, what do we see? More swing lows that price can target while it's currently in a downtrend. So let's say you took this entry on this change in the state of delivery and you have a 2.29 risk to reward. What happens after this change in the state of delivery in this bearish downtrend? Price sweeps sell side liquidity. And after sweeping sell side, what do we end up doing? We create a 1 hour change in the state of delivery again, and this time, let's say you entered on the hourly change in the state of delivery. Price has swept liquidity, and we have all this engineered liquidity. You can assume that price will return and redraw into these highs. So let's go ahead and play this out, and let's see how price wants to react after sweeping this engineered liquidity from months and months ago. Let's see. And just like that, price sweeps the opposing end of the range, price sweeps the buy side, and continues towards these equal highs, these engineered highs. And it is honestly that simple, guys. It is, this is just one piece of the pie that you would need for framing a trade, framing an entry, and framing when you want to enter and where you believe price will draw to. So here's the one sentence I want to leave you with. Price seeks liquidity. So find the pool before you find the trade. This is our pool, this sell side from earlier, or if you were longing and you were more bullish after this trend down is over, this is our pool, this buy side, and these engineered highs. Stop drawing support and resistance like they're levels, like it's a wall, and start asking what's resting on the other side of that stuff. Do that and the chart starts to make sense. You start to understand, why is price beginning to push higher? Why is price drawing towards these random swing points? It's because they're not random, guys. These are resting orders that big institutions want price to head towards and want to fill. And you need to be able to hop on that massive bandwagon, hop on this train for higher, because you do not want to be part of the retail that enters for a short right here, when in reality, we have already swept our target. Anyway, I hope you guys understood something. I hope you guys grabbed some sort of pivotal piece of info that can help you understand, price's movement. If you guys have any questions, let me know in the comments. I'll be happy to answer. I'll literally respond to every single one. But yeah, that's it for liquidity, and I'll go over the next topic in the next video, and you guys will understand internal reversal points, and what is a fair value gap, order block, all that will be covered later on. But I hope you guys understand that price does not move randomly. It has 3 phases: accumulation, engineering, and seeking liquidity. And yeah, I hope you guys have a good day.